On today's hot sheet, I'm discussing the new August tariff announcement, what it's going to do to rates, this year's rise in delisted homes, and a recent survey on seller expectations versus the reality of what's happening today in the market. Today is Tuesday, July 8, 2025. I am Byron Lazine, and the hot sheet starts now. Good morning. Live today from Naples, Florida, out of the Connecticut studio. We'll be back there next week. Let me know which market you're tuning in live from. I see Live Your Best Desert Life. We've got Colorado, Las Vegas, Ruthie. I'll be over there for about 48 hours this week. Couple meetings, couple BAM meetings. Phoebe's in Marin County, Sonora, California's in the house. Saw some of you guys in the BAMX role play. We do the BAMX role play. Heather says, awesome role play this morning. Thank you, Heather. Thanks for jumping in. BAMX members only role plays on Tuesdays all through July, 9 a.m. Eastern. I know that's 6 Pacific time, but it's right before the hot sheet role play. We're talking about some of the things we're going to talk about here, but specific to having the conversation with the seller. We're going to talk about this Realtor.com report. There's delistings happening, which means there's opportunities to fill the void of what the other agent couldn't accomplish, be it a workable plan, a framework of how to get there, or maybe there was just no plan at all and the seller had to delist and restart. All right, let's get into the big economic news to kick off the day. There's implications here on what's going on with the rates, and the rates are already moving. So yesterday, you may have heard the announcement and the hysteria. Trump announces steep tariffs on 14 countries. This is going to start August 1st. And if we move down, what does this mean? Okay, here are the updated U.S. tariff rates on imports. And so July 7th, that's the announcement date. This is where you have these updated. Now, remember, a lot of them moved down, went on pause. There have been some countries that have made deal, China being one of those recently. I think Vietnam recently was another country that made a deal. Here is a list of countries on the screen that maybe didn't make deals or didn't get to a place that the Trump administration thought was acceptable. Okay, so you've got tariffs as high as 40% down to 25%. South Korea is big, in the news right now at 25%. We'll get to that in a second. Japan's at 25%. South Africa, 30%. Indonesia's on the list. Siberia. So you've got a list of 14 countries now that are going to have a higher tariff. They didn't get to into position to negotiate, and now these tariffs are going to be higher. All right, so Nick Timiraos from Wall Street Journal put a copy of the letters that were sent out to these countries, and Trump says this, quote, "These tariffs may be modified upward or downward, depending on our relationship with your country." That's in the letter. Here's the letter to the president of the Republic of Korea. It's a great honor for me to send you the letter. The relationship, we have a trading relationship. The fact the United States has agreed to continue working with Korea despite having significant trade deficit with your great country. Nevertheless, we have decided to move forward with you, but only with a more balanced and fair trade. Therefore, all caps on trade. It's like a extension of a tweet, this letter. Therefore, we invite you to participate in the extraordinary economy of the United States. And the tariff outlined here, they will charge Korea, the U.S. on October 1st, charge Korea a tariff of only 25% on all Korean products sent into the U.S., separate from all other tariffs. For any reason you decide to raise your tariffs down here at the bottom, whatever number you choose to raise them by will be added onto the 25% that we charge. Please understand that these tariffs are necessary to correct the many years of Korea's tariff and non-tariff policies and trade barriers causing these unsustainable trade deficits to the United States. It's important for the national security, goes on to say. And then there's page 2, signed with the Trump pen and signature that I think has signed more executive orders in the first number of months than any other presidency. So these letters went out to these 14 countries, and there's a reaction in the markets. The reaction to the markets has had the last couple of weeks leading up to the big, beautiful bill on Friday has been pretty positive, right? We talked about record levels in the Dow and the NASDAQ, right? Stock markets hitting record highs. We talked about not only that, but a 10-year, which was moving down on this belief that, hey, the big, beautiful bill is going to bring a lot of investment into the end of the year and into 2026. This belief that, as Polymarket says, there's no chances of a rate cut in July, but that there's a 50% chance of a rate cut in September, that the markets believe there's going to be enough pressure on the Fed and this maybe potential shadow Fed, that there will be rate cuts coming, that we're going to get to the end of the year, lower rates, and move into 2026 with a big bill that's going to bring a lot of investment into the economy. Well, one thing the markets do not like is the uncertainty around tariffs. It's one of the reasons why Powell has been slow to cut and refuses to engage in that idea until the Fed can get an understanding of what's going to happen with tariffs. That's their words. I don't think that's the right decision right now. I think inflation, and 3 months into tariff data, shows that inflation has been pretty well handled. Okay, the S&P 500 futures, though this morning, have rebounded from the sell-off yesterday. The sell-off was about 400 points, just over. As now investors are betting tariffs will end up lower than threatened. But you do see, the market moving based on the uncertainty. The uncertainty is clear in that letter. Like, if you raise, we're going to raise, right? There's no clear playbook. Dow's down 86 additional points here at the open. S&P's basically moving flat, and NASDAQ's up a little bit. So the market moved down yesterday on this uncertainty, but there is kind of this stabilization. As the headline CNBC read, the markets believe this won't be as aggressive as yesterday's headlines. Remember what Nick Timiraos from the Wall Street Journal says in his tweet yesterday. And this is something I've been saying for months. These tariffs may be modified upward or downward. Tariffs are a light switch. They're not a tattoo. Okay. Tattoos last forever. Okay. And it takes a long time to unwind them, from what I understand. I've never been in that position. Don't have any tattoos, but it takes a while to get rid of one. You got to plan for it. I think you got to spend a lot of money. Maybe you can do it in an afternoon. I don't know. I've heard in the past you got to do multiple sessions to remove something that permanent. Tariffs are not permanent. A letter can go out today and a deal can be made tomorrow. So I think what the market's pricing in is, okay, the big bill's in. They're getting income off of these tariffs. Income's way up on the tariffs the last couple of months. And the administration's going back now to playbook A of trying to negotiate trade deals that they deem to be more fair for the U.S. economy, right? If the big, beautiful bill is going to raise the deficit, got to have growth, got to have GDP growth. And one way to obviously raise income would be these tariffs. The uncertainty factor, that's what the Fed doesn't like, and that's what investors don't like today. And that's where you're seeing an increase in the 10-year Treasury. And we're now back up to 4.431. So the momentum that we had the last couple of weeks, the momentum that I think I really enjoyed, and I think many of us here that follow the hot sheet data enjoyed, was the momentum of the 10-year has now all but been evaporated here, back to basically 30-day highs on the 10-year. Not at the high level for the last 90 days, but really elevated from where we've been the last couple of weeks. We saw that yesterday. That brought the 30-year fixed mortgage rate up to 6.79. And that was before this jump this morning on the 10-year. Could see that going back into that kind of that high 6 range, whether it be 6.8 or even closer to 6.9. The impact on rates, again, these are short-term impacts. As things change, the rates will change. But the impact right now, markets don't love the tariff uncertainty. They love certainty that there's going to be a lot of money in the system. That's why they loved the big, beautiful bill. But they don't love the tariffs, and there's an impact on rates, and it's happening right now. All right. Realtor.com's got a report out on seller behavior. One of the data points I found really interesting. I led the conversation in the BAMX role play. By the way, if you want access to our members only role play, we do them Tuesdays at 9 a.m. before the hot sheet. Go to school.com/BAMX. Inside the community, you just go to your calendar here and you get access to the member only role play, office hours tomorrow. Mosaic now is providing their software for all members, no monthly charge. Just being a BAMX member, it's going to be, I'm sure, well-attended office hours there as BAMX members learn more about that opportunity. All right. This Realtor.com report talking about delistings. We're going to get there. First, let's go over some of the headline data. Inventory for sale rose 28.9%. The Altos number is even higher than that. Active listing count now edging towards 2019 levels. Realtor.com in line with Altos, which we looked at Monday, above the low levels of 2019. Remember, this active listing count on Realtor.com is not the single family one we look at on Mondays. It's all listings. So condos, everything included, now up over 1 million. That's a benchmark number to really show health in inventory. That's a benchmark number there at 1,082,000 plus 28% year over year per Realtor.com. Total listing count comes in, and this includes pendings. Okay. So when I said, hey, this is all active listings, yes, all active, not just single family. And now you've got total listings, which include the pendings, coming in at 1.562 million. That's up 20% year over year and above, obviously, 2019 lows, because when you include pendings in there, certainly going to be above those wintertime, but starting to close in on 2019 levels. The last year I would consider normal market, this being in a year pending listings year over year down 1.6% per Realtor.com's data. Newly listed homes are up 6.6% year over year in June, but declined for the second straight month. Seasonal decline is expected this time of year. Where is housing inventory growing the fastest? Well, in the West, it's up 38.3%. The Northeast is fourth of the four regions, finally picking it up a little bit at 17.6% on regional active listing count, where it has grown the fastest year over year percentage-wise. Midwest at 21.3%, and the South coming in at 29.4%. Here are the sharpest increases for metros. Las Vegas, 77.6%. A year ago, we were kind of astonished. Las Vegas was like really low inventory levels when you saw Florida rising, and Austin for multiple years now during the real estate recovery, real estate recession since June of 22 at elevated levels, Western states, but it wasn't Vegas. But now in the last 12 months, you've seen that sharp increase in Las Vegas, 77.6% there. Washington, D.C., 63.6% there. And then Raleigh, did I say it right for my Raleigh people? Raleigh, North Carolina, 56.4%. Here's where inventory has grown the highest relative to pre-pandemic levels. I mentioned Austin, they're second on the list at 69.7%. Denver, 88% explosion of inventory versus pre-pandemic. And San Antonio, now 59.7%. Those markets in particular all have something in common, which is they're building there. Here are the metros where you've recovered the least pre-pandemic. I talk about the Northeast and the severe depression on inventory, particularly in Connecticut counties, Hartford being one of those, minus 75.9% to the negative on inventory pre-pandemic. Chicago's in that bucket at 60% and Virginia Beach at 54.5%. Newly listed homes increase across all 4 regions. So we looked at the inventory. Now new listings Northeast are seeing this opportunity of the suppressed inventory coming to the market now at the highest clip of 9.3% increase on new listings. Midwest at 7.7, West at 7.3, and the South at 4.4. Here are the metros with the strongest growth in new listings: Milwaukee, New York, Nashville, and Indianapolis. Median days on market, it's 53. This is in line with 2019. Okay, 53 days on market across the U.S., according to Realtor.com, being the number 2 by scale, by size, traffic, search portal. Realtor.com says we are now in line with normal pre-pandemic times when it relates to DOM, days on market. Okay, this is 9 more days than June of 2023, and we're right in line with 2019. It's plus 5 days year over year. Hey, sellers, it's not March 2022, and it certainly isn't June, July, August 2021. Okay, your home's not going to sell in 53 hours. Okay. There are pockets of the country, but generally speaking, on the macro, we need to have a plan on what happens week 1, what happens week 2. And agents, it's the accountability that's on you. Having a plan for more than a week of being on the market is really smart. We talk. I know Compass has their 3-phase marketing strategy. One thing that we're giving to all BAMX members, whether you're Compass or not, is a 3-phase marketing strategy that's just got a little bit of a tweak. It's Zoodealio phase 1. Set the floor. 4 offers for your seller before you even talk about your marketing plan. Walk in the door with 4 offers. Zoodealio helps out with this show, and they help out BAMX members by giving that platform, which costs others $200 a month, all inclusive in the BAMX membership at $97 a month. They just include it in the BAMX membership. We have BAMX members every week actually accepting offers through the Zoodealio platform. So phase 1, 4 offers, set the floor. Phase 2 coming soon. Phase 3 is obviously the go-to-market strategy. And if you're a BAMX member right now and you're using Zoodealio and you're like, wait a minute, I didn't know about this, just go to last week's content drop. We drop new content, hyperlocal content as well every single week. And here's your 3-phase template for what I just talked about. Zoodealio included in every single BAMX membership. If you're a BAMX member and you're like, hey, how do I just email bamx@nowbam.com if you're confused on how to get your free Zoodealio access. That's a $2,400 value included in BAMX, which is only $970 a year or $97 a month. You get that included as well as Mosaic now. So going into a listing appointment right now and having more than just 1 week, more than 2 weeks, more than 3 weeks on your process, on your plan, on your strategy is really important. The accountability is on agents. 53 days on market, back to normal times. Updates are going to become important. All right. Here are some trends. All 4 regions increased days on market. The South was up 8 days, West 7 days, Northeast 3 days, the Midwest 1 day. Relative to pre-pandemic, West is slower sales cycle. Among the 50 largest U.S. metros, 39 saw homes linger longer. Nashville plus 20 days, Orlando plus 15, Miami plus 15, Tucson plus 12. Okay, how are sellers actually responding? This is going to unlock some insights on how agents and real estate professionals need to go into these conversations. Be ready for a longer tail education process. Okay. US market, it's shifting into buyer-friendly territory. It's a buyer's market in many areas across the country. Okay. We're coming off, though, what is a long and strong seller's market. Okay. It has been outbalanced for quite some time. I would argue that 2019 was a seller's market. Okay. So sellers are all like, do I list? Do I wait? What price? Do I cut? Should I be cutting? Should I be waiting? These prices I saw in my neighborhood were crazy. Do I pull the listing all together and try again? Okay. Listing cancellations, delistings right now are up. Delistings are up 47% over the past year. Okay. So delistings, I'm sorry, up 35% year to date. Yes. And 47% over the past year. All the graphs that I'm showing you guys is available inside of BAMX. So members, you can grab this at your fingertips in the Hot Sheet Classroom. 47% up year over year and 35% up year to date. Sellers go out at a market at an expectation that maybe yesterday's price is still available. The agent signed off on this, and then they end up delisting, whether it's a withdrawn, a cancellation, or just completely firing the agent for a lack of a plan. Okay. They're in an uncomfortable position. They don't want to list the home to pull it off the market. Okay. The supply increases, creating a slower time frame for buyers, more options, and it's creating unreasonable expectations for some of the sellers. Okay. Here's the price reductions happening on Realtor.com. In June on the site, 20.7% of all listings, up 2.3% year over year, reduced the price. Before selling, we see that Altos Research is reporting that single family homes are having to reduce over 40%. This is just June here for Realtor.com's site alone. Okay. Here's the median list price. Now, prices grew 0.2% year over year. Based on inflation, that's kind of negative pricing on the list price. These small increases on list price are in line with 2024's numbers, 2023. So this real estate recession here, they're hot, they're high still. So we're remaining at peak levels. But the median list prices are actually moving down in the West and the Midwest as the pressure on price starts to impact those regions the most. The West is down 0.8%. The Midwest is down 0.9% on median list price. Northeast being up 1.8%, where you have inventory the softest. So 47% said, you know what? I'm taking the house off the market. I'm going to either try a new, put somebody else in as the agent, or I'm going to wait. Spending the additional time walking through the education side on price and what the long-term, what the days on market looks like, what the long-term marketing strategy looks like, is going to save you time and frustration. And certainly the seller is going to believe in you more and buy into your product more when you spend that time. For every 100 newly listed homes this spring, 13 previously listed homes were taken off the market. This is going to be on the up as we move forward into the summer. Clever has some more seller insights for us. How to sell your house in 2025. There's new data suggesting there's a gap between the expectations sellers have leading to some of those delistings that Realtor.com is talking about and the reality. Okay. Nearly 3/4 of future sellers, 72%. Okay. 3 out of 4 sellers, they're confident they'll get offers above asking price. Why are they confident? They think their house is better than their neighbors and it happened to their neighbor. A full 30 percentage points more than the past sellers who say this actually happened. Okay. So 42% said, yeah, that was my experience. 4 out of 10 sellers said my experience was I got higher than my asking price. And remember, that's a past seller who's already closed. That's a rear view mirror market. Just year to date, if we look at the rear view, we're past the spring. April's the best time to list. It's not July. Okay. It's not when everybody's drinking margaritas. It was in April when everybody's setting up the rest of their year, planning for school, getting on with their New Year's resolution of buying a house. It's July and people are living life. Float parties by the pool. Okay. Margaritas. Is it spicy or sweet? Which direction are we going for the month of July? That's what people are focused on. 4 out of 10 past sellers said, hey, we actually got more than our asking price. That number only goes down in margarita season. 72% though of those listing today think, unless their agent educates them otherwise, I'm going to get more than my asking price. So when they get to August and they're under contract and somebody says, what do you think about my agent? I don't know. I think they could have done better. We only got 98% of asking price and I got to pay them. Well, did they walk you through how great 98, 99% of asking price is in August with the reduction of demand, the seasonal reduction of demand and a declining price environment due to inventory? That's going to be, again, accountability on the agent. Here's some more of what sellers are saying in the future versus recent sellers who priced their home correctly. Future sellers, 93%. Okay. 85% of recent sellers, they're confident they won't have to lower their asking price. 77% of future sellers are confident. 43% of recent sellers are confident. So as they're on the market, that number drops from future to recent. They're confident they'll get offers above asking price. 72%, again, 42% people that actually did it got there. Believe their home's appraisal will not come in below the buyer's offer. 9% believe their home's appraisal will not come in below the buyer's offer. 38% of recent sellers had the opposite experience. Okay. How many offers do you expect or did you receive on your home? Future sellers expect 1. Recent sellers expect 1. 5% of future sellers expect 1. Here's the deal. Future sellers are expecting 2 to 4, 5 to 7, 8 to 10, or more than 10 offers on their home in a market where pending home sales are at best flat across the country. Closings are off a tick. We're trending towards 4 million existing home sales, and we've got pressure on price. We're in the basement on closings again, and sellers are saying, man, I expect 2 to 10 plus offers on my house, and maybe in a short period of time. Don't go into a listing appointment like it's 2021, like the seller wants you out of the home because they're afraid to catch the vid. Okay. Plan on spending time educating them on where the market is today. Expected time on market, less than a week. Future sellers, at least it's only 5% of them there, but 18% believe it should be less than 2 weeks and 43% believe it should be less than 4 weeks. Yet DOM is up over 50 days, less than 2 months, 68%, less than 3 months, almost everybody, 87%. Actual time for recent sellers is significantly different than the expectation. Okay. Actual time for recent sellers, the increase on less than a week jumps up to 26%. That shows you correct pricing strategies for 1 out of 4 sellers. Less than 2 weeks, 40%. Less than 4 weeks, 60%. Less than 2 weeks, 71%. Realtor.com's number, again, though, is showing that number days on market is starting to shift. As part of your sale, are you expecting to, or did you expect to make major renovations or repairs? Future sellers, 76% expect it. Okay. So know that going in to the conversation. 76% of sellers are expecting some kind of repair. So it's not going to be a shocker if you have advice that fits that narrative. Recent sellers, 30%. Future sellers considering offering other incentives. Ivy Zellman talks about sellers should be offering incentives before slashing price off of comps. Okay. Now, what did I not say there? I didn't say slash price off of aspirational cross the fingers and hope price. I said before slashing price off of recent comps, sellers should be thinking about offering incentives covering closing costs. Okay. Example being, what do builders do? They negotiate on packaging a better deal versus slashing away from where the comps are. Ivy Zellman thinks existing home sellers should do the same thing. Recent sellers, 27% considering offering incentives. 40% of future sellers willing to extend the closing date to fit the buyer's schedule. 28% of recent sellers actually had to do that. Future sellers, 29% willing to offer repair credits. Future sellers, 25% are willing to cover the home inspection. Okay. Well, you may be in a situation where you have to do that depending on where you end up with demand in the market. 91% of future sellers are confident they'll choose the right real estate agent. Yet Realtor.com reports that we just went over here, 47% increase year over year on delistings. One of the reasons sellers delist is not just I changed my mind. I delist because I got in with the wrong agent. It's a big reason. A lot of sellers are going to blame their agent for misguiding on price before they blame their emotional attachment. Okay, it's just the deal. 91% of future sellers, though, they're confident they're going to choose the right agent. Your ability to break through and get in as the part of the conversation as an agent is paramount to maybe influencing their mind that, hey, are you picking the right agent by only interviewing one? You should have a second opinion. Or 84% are confident choosing their way of selling and would choose the same method again for future sellers. And 56% of future sellers are considering selling without an agent to save money. Remember, this data is collected by Clever. They want less people to use agents. And the data does not support that 56 future sellers are going to sell without an agent. We know that number is obviously less than 10%. So there you go. There's some of the data there. We're going to drop all the relevant data into BAMX for members. Just go into the classroom for Hot Sheet. And of course, I'm going to have to log in here, and I will do that really quick. Go into the Hot Sheet classroom and jump into Hot Sheet for today's extensive look at all the slides that I use, all available for you at your fingertips to be able to use that in your marketing or conversations or text messages today. Zudelio mentioned earlier, all BAMX members have access to the Zudelio platform. It's a $2,400 savings for BAMX members. Set the floor on pricing. They collect more data on cash offers than anyone. Top 10 housing markets for cash offers right now: Phoenix, Vegas. I'll be in Vegas tomorrow afternoon. Atlanta, Dallas, San Diego, Jacksonville, Tucson, Albuquerque, Orlando, and Detroit. Since I'll be in Vegas on some BAM meetings, some super secret BAM meetings happening over the next couple of days, there will unfortunately not be a Hot Sheet here for the rest of the week. Okay. If something goes crazy, maybe I'll break in with a surprise live or something like that. But the plan right now in a slow after fourth week is to come back on Monday with the Hot Sheet with some of the meetings and travel schedule that I have going on. That is the current plan. So no Hot Sheet over the next 2 days. I will be back Monday. Make sure that you're signed up for BAM BBQ. That'll be Wednesday of next week. This is going to fill up before Wednesday. It's completely free virtual event, July the 16th, 12 to 2 Eastern. BAMBBQ.live, 9 a.m. to 11 Pacific time. Ryan Serhant, Leo Pereira, the Experience.com CEO, Scott Harris, myself, and Eric. Tons of entertainment. Eric was reviewing the entertainment yesterday on our call. It's going to be, if you've been to our live events, it's going to be like no other live event. I think this will be our best one, bringing the heat here over the summer. That's next Wednesday, a week from tomorrow, BamBBQ.live. See you on there. I'll have a new Real Word pod here up later on in the channel. Until then, of course, have a great day and toodaloo.